Hello everyone, this is Syahrul. I'm a student of MBA IPMI International Business School. I'm going to share about the corporate finance subject with the lecturer, Professor Sembel. So let's get started. In the subject of corporate finance, there are the material already been covered. We have intro to finance management, time value of money, capital budgeting, analysis of security, and so on. Next are the point of sub-point of the intro finance management material. The first one is about the goal of financial management. The second one is about the principal agent problem. The third one is about the important financial concept. The fourth one is about the goal of the firm. The fifth one is about the four cornerstones of corporate finance. And the sixth one is about 5 business essentials by Indian American business consultant Ramadhan. For goal of financial management, we have 4 different types of goals. First is about the basic objective. The basic objective finance management to different things, which are wealth and profit, wealth maximization and profit maximization. Both wealth maximization and profit maximization will create significant and sustainable value creation. The second one is about the operation objective. The aim of the time availability of the most effective utilization of finances, the safety of investment, and the growth of the enterprises. The third is about the social objective for timely payment of interest, taxes, and wages, payment of reasonable dividends, fair settlement with supplier, and maintaining relation with the financier. The fourth of the research objective, which aim to research new and better source of the finances. Next, we have principal agent problem, and we are going to concerning about the problem and solution. And the principal agent problem is about conflict and priority between a person or group and the representative authorized to act on their behalf. And first, we are going to talk about 3 main problems, which are the conflict of interest, asymmetric information, and moral hazard. Then, what will be solution for these 3 main problems of the principal agent problem? Based on what we have discussed, there is no 100% correct solution for principal agent problem. However, they are close enough to cover the problems, which are GCG principle or good corporate governance or tariff or trade. The first letter T is about transparency. The second letter A is about accountability. The third letter R is about responsibility. The fourth letter is about independence. And last but not least is F is about fairness. Additionally, we have many important finance concepts that already mentioned in the class. We have risk-return trade-off, time value of money, cash is king, and so on. Other than financial management goals that I already have mentioned, now we do have a goal of the firm itself. We have 3 things to be maximized and 1 thing to be sustained. The 3 things to be have maximized are profit, shareholder wealth, and stock price. 1 thing to be sustained is profit. There are also 4 cornerstones of corporate finance. The first is about the core of value principle, which is about the value, and value is driven by return. The second one is about the conservating of value principle, which is you cannot create value by rearranging claim or cash flow. The third one is about the expectation treadmill principle, which explaining about the more investor expect you share price, the better you must perform to keep up. The fourth one is about the best owner principle, with explaining about the business value depend upon the owner capability. Then 5 business essentials by Indian American consultant Ramadhan are also mentioned. The first is cash, the second is profit margin, the third is velocity, the fourth is growth, and the last one is the customer focus. Time value of money or TVM is also one of the material that are mentioning in this video. The concept of the TVM is about the value of money yesterday, today, and tomorrow are different. If we receive $1 today, it is worth more than $1 in the future due to the opportunity cost. We also have the rule of 72 and the application of TVM. Here is rule of 72. Rule of 72 is an approximation of compound rate. For instance, how long does it take to double of $5,000 at the compound rate of the 12% per year? The answer is approximately 6 years, because we use the rule of 72, which is the 72 divided by the interest rate I% as the compound rate 12%. So the answer is 6 years, which is still very close to the actual time. And there are several applications of the time value of money. It can be used for a mortgage or car loan payment, life insurance, personal finance planning, time deposit, and so on. After that, we have capital budgeting. It is about the process for investment in long-term asset. Also, it's a decision-making criteria or whether we should accept or reject long-term investment proposal. On the investment part, we study about the capital budgeting, comprised of the NPV, internal rate of return, profitability index, and payback period. Next is about the analysis of security or portfolio investment. There are two types of investing, active and passive. In passive investing, investors just following the market. However, in active investing, there are fundamental, technical, and market investor sentiment analysis. Fundamental analysis is about the domestic and global economic analysis, industry, and company. For technical analysis, there are many things. It's about the uptrend and downtrend, support and resistance, triangle, moving average, and etc. In market sentiment analysis, is about the investor attention or which are the best stock to trade. On the financing part, we study about the capital structure, what is actual of the optimum debt and equity composition with the main consideration of tax benefit and also financial distress factor. Next, we have corporate restructuring, which cover the outcome of financial distress, surviving and transforming business, and restructuring corporate culture. About the outcome of financial distress, it has turnaround opportunity and also permanent problem. For turnaround opportunity, we have three things to be restructured. First is about the operation restructuring, second is about the asset restructuring, third is about the financial restructuring, which is about the private workout of filing or legal bankruptcy. The second is about the permanent problem, which is about private liquidation and also filing for legal bankruptcy. There is also a topic about occupation fraud and abuse with its risk. There are three types of occupation fraud and abuse: corruption, asset misappropriation, and fraudulent statement. Corruption is based on conflict of interest, illegal gratitude, and economic extortion. The second one is about the asset misappropriation. It is about the cash and inventory and all other assets. The third one is about the fraudulent statement, which is related to the financial and non-financial. There are also several reasons for occupational fraud and abuse. The first one is huge personal debt and loss. Second is about the lifestyle beyond income capacity. After that, we have over speculation in get rich quick scheme because people just want to get rich quickly and gambling and etc. And this one is about the fraud hexagon. The 6 fraud hexagon are a perceived opportunity, which is about weak internal control. The second one is need, character, competence, arrogance, and justification. Now we are talking about the shenanigans. There are actually 7 shenanigans. The first one is recording revenue to source. The second one is recording bogus revenue. The third one is boosting income with the one-time gains. The fourth one is shifting current expense to a later or earlier period. The fifth one is failing to disclose all liabilities. The sixth one is shifting current income to later period. And the last one is about shifting future expense into the current period. We also did learn about the dividend policy. But first of all, let me start with what is the dividend. The dividend is a distribution of company earning to its shareholder, and it is determined by a company board of directors, and here is about the dividend policy. When we pay dividends, stockholders receive an immediately cash reward for the investing, and in dividend policy, it is also involved 2 decisions. The first one is about the how much of the firm earnings should be distribute of shareholder as a dividend, and after that it is also how much should be retaining for capital investment. Last but not least, is about the portfolio performance evaluation. After we already discussed about all of our stock pick from our all of the group, then is explaining about the market efficiency. In market efficiency, price reflected all of available information from weak to strong efficiency. The general strategy in market efficiency is diversified and passive investing, and the lesson learned from our lecture is that market efficient. So the answer is not about yes or no, it's about the black or white. It is a spectrum. Thank you so much for watching, and bye bye.